Investors and traders, welcome to the channel Market Chart Pattern. Today is 4th of May 2023. In this video segment, we will be taking a look at the key US technology stocks that we like to follow on this channel. This video is for educational purposes only and it is not a financial advice. So guys, what we're looking at is the daily chart of the stock Apple. Apple had its earnings come out today. I do not know from a fundamental perspective how the earnings were, but looking at the price action today, what we have seen is actually a pattern formation, which is a island formation of an island reversal kind of formation. But in an island reversal, what I would have liked to see is the today's candle actually closed bearish, which it did not. So it's not in my opinion a island reversal pattern as such. So guys, yesterday I'd done a video. The video was about the major US stock indices that we follow on this channel, and what I had also mentioned was that a lot of attention needs to be paid to the Apple stock, and towards the end of the video we actually discussed Apple stock. And what I want to highlight your attention to is this shaded area, in this yellow shaded area here. And what seems to be this pattern is actually a 3 drives to a top pattern. We have a wedge formation here as well, which is drawn in this purple line. And what we have seen is actually the market actually closed lower after reaching these levels on 3rd of May, and today gapped lower, and what it has done is found some support from this channel line, the bottom end of the wedge pattern. If the price begins to close below this, then it is a breakout to the downside. Most of the times the breakouts actually fail. So what it means is there's going to be a chance that it actually goes back and trades back into this range. And if that on the second test it begins to fail, then that's more of a confirmed signal. Also, if you have been following our channel for quite some time, you will know this. But for the new subscribers and also the new people who are watching the channel, we have been actually looking for a range for the Apple stock. Originally we were looking for about $166 per share level. However, on the weekly chart we did have $171 to about $175 per share level, and what we have seemed to done is actually met that range, or at least the lower boundary of that range. So what I had also talked about was something which really like to follow on this channel is the market symmetry, which is a concept that markets repeat over and over again. And we have a symmetry in this Apple stock, and what it is basically, if I take this purple line and we measure this move from the bottom to the top, it was pretty much this much in amplitude, and then we had a pretty nice sell-off. Then the second one, the rally which we had was this much magnitude, and what do we have now? So you see the market symmetry. This is how the markets repeat over and over again. So what is happening is that we have reached certain kind of levels which are really key for Apple stock, and from here onwards, from this range, I do not have further targets for the moment, and we'll be watching the price action. In fact, this pattern formation highlighted in the yellow, it is 3 drive to a top pattern formation, and we're just waiting for further confirmation, and it could actually we could see a pullback happen in the Apple stock. So just to really quickly look at it on a weekly basis. So here we are looking at this Apple stock on a weekly basis. So what you can see is that the stock has actually been in a trading range since December 2021. And in fact, we had identified this $182 per share level as a top. You have to just watch out the old videos. Way in advance, we had projected that. And what the stock has done now is actually just retraced a 78.6% Fibonacci retracement of this swing high to this low here. And it has done this in this ABCD formation, and the ABCD formation actually is a little bit above about $175 per share level, but this 78.6% Fibonacci retracement could be a pretty strong resistance level. So this is what we are watching, and essentially what the stock has done is just retraced the upper boundary of this range. Now, what is really, really important, and whenever we do the longer term analysis of the Apple stock, I always like to point this out. $128 per share level is really important in the Apple stock. Look at the amount of Fibonacci retracements that are coming here, and this 38.2% Fibonacci retracement. This is basically going all the way back to December of 2018 low. So until this low is broken, $128 per share level, the stock remains pretty strong. And also from a currently on a momentum basis, price is above the 20-week moving average, which is this blue line, and this gray one is the 200-week moving average. So momentum is also strong. However, we have also seen that the stock really pulled back to form this ABCD formation highlighted in the green, and where we also had really strong Fibonacci confluence levels coming from multiple lows around $128 per share level, roughly speaking. So the chances of a pullback happening in the Apple stock is more now because of the aspects which we have described in terms of the pattern formation. Let's move on to Tesla. So I'll just briefly cover Tesla here because what we are watching is this. We had identified this ABCD 1-to-1 formation coming around $155 per share level, and so far the stock seems to have held that. However, if there's going to be a weakness in the overall market, that could also impact the Tesla stock. So the real key is to actually also watch for this $145 per share level, and this is where we also have this gap here. So it's possible that it just goes and completely fills this gap. But if you compare with the overall market price action over the last couple of days, the Tesla stock is holding pretty well. Let's take a look at the Microsoft. So the Microsoft stock is also trading a little bit above the 61.8% Fibonacci retracement. Now the key question is whether it's going to go a little bit higher and test the 78.6% Fibonacci retracement from the highs formed in November of 2021, which come around $320 per share level, or is it just gonna consolidate here and from here begin to move rotate lower? Particularly if it begins to do that, we're gonna see pressure come in the major stock indices as well, because of the weightage of this stock in a number of popular stock indices, which we also like to follow on this channel. So this is what we are watching, where it's going to go and test this $320 per share level at the 78.6% Fibonacci retracement, which is going to provide likely a pretty strong resistance. We have also highlighted this zone here with this shaded area. Okay guys, so let's take a look at Amazon quickly. So there we go. So Amazon stock, it's been pretty weak, especially if we compare it to like Apple or Microsoft. And I think one of the reasons is that because the Amazon stock comes under the discretionary spending of consumers, and also they seem to be having some slowdown in their cloud business, which is their more profitable side of their business. So we were actually looking at this green line as the ABCD formation, that the price might be in this ABCD formation, and it could actually reach $120 per share level. However, the price has just been consolidating and in fact found a pretty strong resistance. It retraced for the last 3 days after hitting this 78.6% retracement at 108.20 level. So it's not been able to close above it on a 2 daily consecutive basis. So it looks like maybe it's gonna go and retest this 96.40 level, and maybe even lower if it breaks that level. However, on the upper side, there's gonna be resistance coming from this top if it begins to move around $112 per share level, and the ABCD could actually take it to around $120 per share level, where we have pretty strong resistance coming from this this Fibonacci retracement of 61.8% Fibonacci retracement. That's going to be pretty strong resistance. And also we have this 1.618 expansion around $120 per share level. So this is what we're watching in Amazon. Let's move to Meta. So the recovery in Meta stock has been really remarkable, and for quite some time we were actually watching this level of $200 per share level, because that was the 38.2% Fibonacci retracement of all-time high reached by the stock, and also the recent lows, which came at 78.6% Fibonacci retracement of that low formed back in 2012 when the IPO happened, around that region till all-time highs. And what we have seen is actually the stocks struggle at this $200 per share level, and we thought it might just be a dead cat bounce. However, it broke above it, and now it reached this 50% retracement level, and it just looks like there's going to be some weakness come in this stock as well, and it could actually in fact pull back all the way to $185 per share level, which is the here we go, just to point that out, which is the 38.2% Fibonacci retracement coming around here. Moving below that, we have further support at $150 per share level, roughly speaking, but the 61.8 comes around 147.50. This is what we are watching in Meta. Now let's take a look at RBLX. So the price action on RBLX is actually disappointing. We thought that the stock is moving in this ABCD formation higher, which it might actually eventually do, but there is a number of resistances that we had actually identified where the stock must overcome this in order to be able to achieve the around $55 to $60 per share level, roughly speaking. And in fact, what it's doing is, like, since last year, May of 2022, the stock is just in a really big trading range. And what it has done recently is it's done this ABCD retracement here. So just to illustrate it for your if we were to copy this and bring this around here, there we go. So this is what the stock has done, and we'll have to watch and see whether it's going to be a kind of a double bottom formation coming in from here, structural support, or if it's just going to break that, then we are looking at further downside targets. We have to wait and see over the next few trading days what the price action is going to look like. Quickly, we'll take a look at Netflix. There we go. So guys, in the Netflix, we have a couple of ways to look at this stock. What we are looking at is basically a pretty remarkable recovery in the stock since last May of 2022. Actually the stock rose and went all the way to 38.2% Fibonacci retracement, and here it found pretty strong resistance to this 38.2% Fibonacci retracement. Let me actually show it to you where it's coming from. So these are the all-time highs reached, and this was the recent low, and it has just retraced about 38.2%. And here it's found pretty strong resistance, and it's just been going consolidating and moving lower since the beginning of pretty much beginning of this year, 2023. So what we think is it might be doing this ABCD formation to the downside, which could see actually the stock move lower to about $275 per share level. And if this scenario were not to take place, then the key level is this $310 per share level. That's the 61.8% Fibonacci retracement of this swing. Let me actually highlight this swing for you. This one I'm talking about. Moving below this increases the chance that actually, in fact, it's moving in this ABCD formation. $275 per share level is going to be a key support level, because that's the 50% retracement, and also a one-to-one ABCD level which comes here. Now, in fact, what it did was the stock, it broke below the $325 per share level, which is 38.2% Fibonacci retracement. So it really needs to keep on trading above this $310 per share level for a possibility that, in fact, it could actually test the upper boundary of this trading range, and in fact break out of it. If in fact the breakout does happen to the upside, then we could have a one-to-one formation, which is going to be the A, B, C, D to the upside. Well, looks like that scenario, I'll give a probability of about 40% and 60% chance that actually it's in this ABCD to the downside, in my opinion. So guys, this is what we are looking at for the key major technology stocks, USA technology stocks, that we like to follow here. If you like the way we like to do our analysis using pattern recognition, Fibonacci ratios, confidence levels, and harmonics, and then please do subscribe to this channel. And if you found this video of educational value, then please do click the like button. That way I know that people find the videos that I put out for good for their education, and it just encourages me to keep on producing more videos, because it does take effort to bring these out on a daily basis. Pretty much this is what I do. I enjoy making them, but it just just makes me feel good that people are actually finding the content useful for themselves. So thank you very much. Good luck and good trading.